Hello and thanks for checking out TheChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello MJ friends, hope you're doing well. We're going to look at a bunch of tickers today. CGC, ACB, APH, Cron, TLRY, NBEV, RIV, TRSTN, and Hexo. We're going to start on the weekly time frames and zoom into the daily charts, and then zoom in a little bit more to see what we're looking at to start next week. We're looking for some suggestions. We're starting a store with clothing, sweatshirts, t-shirts, and we're struggling to find a good supplier. Obviously, there's tons of suppliers out there that have everything we want, but they're not sustainable and they use crappy cotton, and we would like to use something either organic cotton or hemp or bamboo, and obviously that really limits us, and it's really a lot more expensive, and shipping's a lot more difficult. So basically, if you have any companies or websites that you suggest for sustainable clothing where we can print our logos on it and have them do the shipping, we would appreciate any insight and feedback. So we're going to be making a non-profit and putting all profits of the clothing towards that, and that's going to start the Do Good Things movement, and we'll take it from there. But appreciate any insight. So looking at CGC on the daily time frame, we have upper wicks, or this is the weekly, upper wicks of profit taking 3 out of the last 4 weeks. So clearly cautious of that, and we see clear weakness at the end of the day on Friday with a bit of a sell-off. And honestly, it seemed like with the timing of things, that coincided with the company saying, oh, that trademark we filed, Chronic by Dre, we didn't mean to do that, which is the dumbest thing I've ever heard. Obviously, someone signs off on you filing for a trademark. Either way, that news came out that, there's no association with Dr. Dre to CGC, and that's probably one of the reasons that we saw a little bit of that weakness at the end of the day. And one of our chat room members won the day by saying, looks like they forgot about Dre, which is exactly what happened. So, kind of inexcusable how that could possibly happen. Anyways, CGC on the daily time frame, we're still holding support. So the last video that we did, we pretty much said that we were looking for a buying opportunity due to the hourly oversold conditions on how we ended on Thursday. So knowing that, let's just form our equilibrium here. So knowing that, on Friday morning, I knew I wasn't going to be at my computer, and I set orders to buy the open as soon as I saw that we were going to see a gap down open. So what I did to do that, normally my standard position size for CGC, I'm looking for 20-30 cent scalps, and I have a lot more risk and a lot more reward with those position sizes. With this instance, I played with 25% of my standard position, and I bought because I wasn't going to be at my computer and I was going to be away from the charts. And I said to myself, if I get filled first thing in the morning with 25% position and we keep pulling back, that hourly RSI is going to be overextended enough that I'm going to be fine adding to my position. And I can add the other 3/4 of my position, every 50 cent down if I have to. So I wasn't very concerned with the potential of seeing further weakness first thing in the morning. And then obviously the best case scenario happened where we saw a significant bounce and I was able to do nothing in terms of any effort of watching the charts. I was actually out riding a horse at the time, and I sold for $1.50 higher. And because it was a much longer trade, a much more significant move, I usually don't hold my standard position for $1.50, but this 25% position, getting that $1.50, ended up being more than what my standard day maker of a trade would be of 20-30 cents. So it ended up working out, and it was good for me because I'm not a swing trader, and I'm not a trader that trades when I'm away from my computer, because I'm at the computer 95% of the days that we are trading. More than that, I pretty much just say, all right, if I'm not on my computer, I'm not trading. But this was a good example for me on ways that I can still do that and take some more time away from the screen. So we definitely ended with a big upper wick of profit taking and closed down near the low of the day. That's not good for the bulls. It shows a lack of bounce. It shows the bears are still strong, and we're close to losing the daily uptrend here. One by one, these names are losing their daily uptrend as we head into October 17th. And at this point, we've got 5, 10, 12 trading days left before October 17th. 48.02 is support. If you look at extended hours, it's in the 47.70s. But essentially, let's just go through the key support levels that we're watching from here. and we cooled off the hourly RSI with that bounce Friday morning. So 48.26, 47.72, and then 46.20 are the three support levels that we're watching. We have a new resistance on the 4-hour time frame. 51.21 is our lower high. So we are entering Monday with pretty much the bulls need to defend support, and if they don't, it's going to change momentum. It's going to shift us into a daily pullback, and then on any bounce that we form from there, we're going to anticipate a lower high is going to form on CGC if we lose $48 as support. So we're right on the brink of breaking that support. Checking in on ACB. Weekly time frame still fine for the bulls. We have an upper wick. When we consolidate, we'll look for a higher low to form. And same thing for CGC, the weekly time frame. I mean, there's two different schools of thought. There's mentalities going on right now where everybody wants it to run into October 17th. But if we step aside from that date and zoom out, let's just look at the chart for what it is. And we're in a very strong weekly uptrend. There's no signs of a weekly long-term trend being lost at this point. The red flag for CGC would be a 20% drop and a break of 40.68. And that is obviously not close to happening at this point. So again, it's all about perspective. It's all about what your intentions are with your trades and your positions. But if you're thinking longer term, there's no red flags on the weekly chart at this point. The red flags are on the daily chart. So for ACB, next time we consolidate on the weekly, as long as it's above 765, it's going to be a higher low, which is a lot more likely than not. The all-time high up at 1520, we got up to 1348, so within striking distance, but it's going to require some solid follow-through to get up to those levels. ACB clearly stood out as the lead bull at the end of the day. We got an upgrade at the end of the day. Price target raised to $13, and that definitely had a little bit of a boost. And we're going to be watching to see if this momentum can carry over into Monday. So 1144 was the daily higher low that the bulls needed to hold, and we did break that level. And this is one of those instances where I was talking about in the last video where individual names can break their support levels, but if it means that CGC is going to bounce, if CGC is oversold and looking for a bounce, these names are going to bounce with it, even though they did break their support. So that's always important, and that's why the sector leader is so important to be watching. And there was instances today where, people were in a position that they wanted to get out of in other individual names, but they didn't sell because they knew CGC was due for an hourly oversold bounce. And so that made them a little bit more patient and allowed them to get a little bit more upside before selling that position. So resistance levels, looking at the 4-hour for ACB, we have not many until we head back to our recent high. But because of the size of this pullback from 1348 down to 1121, that's a very significant pullback, 20% roughly. So we would look for a lower high, more likely than not, compared to 1348 if the bulls show up Monday. Keep an eye out for a lower high and then a pullback and a higher low and potentially a 4-hour equilibrium to be watching early next week. But overall, bulls on the daily chart are still looking pretty good, even though that support level did break. Obviously a very significant recovery. It's a bullish engulfing candlestick and a close near the high of the day. APH on the weekly chart has already started the pullback. Inside bar, bear break. It's on declining volume, which is a good sign, but we're topping out compared to the all-time high. It almost looks like a glimpse into the future of what ACB could potentially look like on its weekly chart with its all-time high near proximity, and if we start to level out here a little bit. So APH has already started pulling back more significantly. As we know, we lost the key support level on APH. Definitely a red flag for the bulls. Look at the back test and rejection from resistance. Previous support, now resistance. That level was 1857. What was the high of Friday? 1854. That's not a coincidence that we rejected just under where key support was. So previous support, now acting as resistance. Anything under 2057 is just a lower high, keeping the bears in control, and support is now 1737 and then on down to 1576. So even if you are a long-term holder and you are thinking long-term, weeks out, months out, years out, if you lose the daily uptrend and there's a lack of support nearby, this is a perfect example where you can just be looking to sell and then rebuy with more shares. So if you sold on the break of 1857 and the clear loss of the daily uptrend, you could have reloaded anywhere in the mid $17 to upper $17 range and added, 2, 3, 4, 5% to your entire long-term position just on a one-day flip. So you don't have to try and nail the bottom. A lot of people, once they exit their position, they're really hesitant to get in. But if you're in a long-term position and you exit that position, if you can get back in 2% lower, you just won. So it's not something that you need to try and pinpoint the exact bottom on. Again, we're not going to nail tops and bottoms, but if you can sell a position and then reload a few percent cheaper because the technical setup is clearly there for a bit more pullback, that is a good way to compound profit and increase position size with the same amount of capital. So checking in on APH 4-hour time frame, looking at the lower high, resistance is 1988. Anything under that level, just another lower high. And we'll see if the bulls are able to hold 1737. Essentially, the range of Friday's trading is what we're going to be watching first thing Monday. Bulls have to break the high of Friday to see some bounce continuation. But then again, anything on the daily under 2057 is a lower high. So we are likely to form a lower high on this bull move. And the bears are going to be waiting for that entry. And they're comfortable doing so because they can say, all right, the bulls bounce up to 1950, let's say. Bears just make a bearish entry at 1950. They put their stop above 2057. And they will get stopped out if the downtrend breaks. But it's a very clear lower high pattern at this point, and the break of support definitely has the momentum favoring the bears short term, knowing that a lower high on the daily is more likely than not. Again, news can always change anything, but without any news, that's where we currently stand. Daily inside bar on Cron on the weekly. We know Cron has been significantly weaker on this past week of consolidation, but the bulls are attempting to build a base of support here, and they're trying to form their daily higher low. This is one to watch on Monday. 1082, 1085, 1086, pretty much a triple bottom at the low of the past few days. And bottom fishing that support level of 1082 has gone really well both Thursday and Friday with some great trade opportunity. So now we have a clear lower high pattern where every day for the last 6 days is a lower high, last 7 days. And we're looking for that pattern to break to indicate that our daily higher low has been established. So because things are so tight, we zoom into the hourly and look at how much tighter we can make it. So at this point, support is 1093, resistance is 1140. We're trading sideways right within this middle of the range. We've got 1140, 1147, and 1151 as the first 3 resistances for the bulls to break. So you can see we're leveling out here. This is close to a trend change, and I had not looked at the Cron chart since the last video that I did, and now this makes me a lot more interested in Cron live on video. So keep an eye on Cron, because if we break these lower highs, we are looking for some decent little follow through. And again, a very clear base of support that the bulls are going to need to maintain to establish this daily higher low and then see follow through. The size of the pullback would absolutely have us looking for a lower high on this bounce. So bulls don't want to be too greedy if we do get this follow through. You know, maybe we'll look to the mid $12 range for the potential lower high to be set. It all depends on how much volume we see behind a bull break if we get it, and the kind of follow through that we get as well. TLRY, beautiful follow through for the bulls the past 2 days. At this point, we have seen a bounce now of 45+% from the 97 must hold support, and that was the must hold support because that was the daily uptrend. We bounced off that level. Bears are looking for an entry now. The bull entry is gone, in my opinion. If you are not already in a bullish position, it's too late. We've already bounced 45%. You don't want to be getting in on a name like TLRY after we've already bounced 45%. The odds of a daily lower high forming and a tightening range forming are a lot more likely than not. We don't know when we're going to top out, but when we lose the hourly uptrend, we're going to say, all right, our daily lower high is very likely set. We've got a daily support level of 134, I should say an hourly support of 134. Anything above 134 keeps the uptrend intact. Lose that uptrend on the hourly, and we look for that daily lower high to be set and an equilibrium to form on TLRY. We would look for the lower high. We would then look to pull back and form a higher low compared to 97. And this right now, I know that TLRY is going to give us a tightening range to trade on this daily time frame into mid-October. So people talk about, you know, how do you pick your trades? How do you make your plans? I know right now that we are, unless, again, major news or something that's going to make me eat 6 bananas on video, sends us to higher highs. If that happens, then that happens. It's not going to happen in my opinion. So we're going to look for a lower high, and then we're going to look for a higher low. And we're going to look for this range to tighten into mid-October. We're going to have a really nice daily tight range to be watching. And I know that TLRY is going to give a really sweet day trading or a really sweet trading opportunity based on the daily chart sometime in mid-October, very likely. So if I weren't watching it every day, which I am, just keeping tabs on the sector, I would write this down next to my computer. Daily equilibrium forming, TLRY, and that tells me every couple days, every day, whatever, check in and wait for that trade to get really clear and establish itself, and then I make the trading plan based off of that. So that's how you look ahead into the future in terms of finding plays that you're going to be playing later on. RIV, no follow through for the bulls on this bounce. Daily chart is still lower highs and lower lows. Hourly chart gave back a lot of this move, more than the bulls would like to see. So this is the kind of thing where you gauge consolidation. And, you know, after the bull move, people ask me, where can we expect pullback? Where can we expect a higher low to form? And the answer is I need to see what consolidation looks like. I need to see what the volume is behind it. I need to see where the bulls do show up and defend some support. And the fact that we have given back, this move went from $5.95 to $7.10, so a $1.15 move. And now we've gone from $7.10 down to $6.27. So we've given back 83 cents of that 115 cents. That's well more than half the move being given back. That's more pullback than the bulls would like to see. And when you see, if we had only seen maybe these 2 candles of consolidation and then the bulls showing up, there's potential for continuation there. But because of the size of the pullback we have now, we know that an hourly equilibrium is the most likely pattern, where even when the bulls do show up, we're going to anticipate a lower high to form, because it's less likely that the bulls are going to be able to recover that significant of a pullback to just see straight up continuation. It's possible, but it's not the most likely scenario. So we need a clear hourly higher low to form. Changing the 15-minute trend will give an indication that the hourly higher low has formed, or even the 5-minute trend. Change that 5-minute trend, and that'll be the first signal. Bulls were close to it at the end of the day. Breaking 645 would be the first signal that the hourly higher low has been established. And again, if we see solid bull volume, increasing bull volume, that increases the chances that we can just see continuation. If the bull volume is not impressive, that increases the chances that we're going to see an hourly equilibrium on that move. And Bev on the daily time frame also saw a very solid move, and we held that support of 361. So we have a higher low now at $4, and we broke a bunch of resistance. Look at that volume. This is the volume spike we were looking for, and it shows you the direction. Obviously, this bull move is a way more powerful move than the bear move that we saw from these inside bars breaking. That volume did not spike. We did not see a big range. The range of that bear break day was 42 cents. The range of the bull break day was $1.49. Way more significant, way more volume. So at this point, there's a lack of resistance on NBEV in the near term, but the bulls are also a little extended. So this is the kind of consolidation where you can see continuation. Very low bull volume. We did not get back the majority of the move. The move went from 407 to 572. So we're talking $1.65 to the upside. And then from 572 down to 502, we gave back 70 cents. So we didn't even get back half of that move. And the bulls attempted for continuation at the end of the day, but they did reject. So we do have a 15-minute equilibrium to be watching as we head into Monday's trading action. And this would be a lower high here at 563. So the range is 502 support, 563 resistance, and we'll see which direction breaks first on Monday. And the potential for continuation is there, but NBEV likely needs to see the sector as a whole with some strength as well. OGI starting pulling back on the weekly. So the weekly inside bar broke bearish, but there is a lower wick showing bulls buying some of that dip. The daily uptrend has been lost here as well. So we had a pattern where we have the equilibrium forming, high, low, lower, high, higher, low, and we came down and broke that support first thing. We actually broke it at the end of the day on Thursday. But the bulls showed up. Why are the bulls showing up right when a key support level breaks? Because CGC was oversold and bounced and took the sector with it. So resistance now, 712 stands out as a clear level of resistance, and we are looking for a lower high compared to 782, and 712 will be a key short-term level to watch. If we can't break that level, we have a lot of clear lower highs to be watching. If we do break that level, that shows a decent follow-through move from support breaking, and that keeps the bulls alive in this pattern. You know, just because we broke support doesn't mean it's game over for the bulls. Again, if CGC were to turn things around and the sector follows, that would be notable. But that end of the day bear momentum on CGC definitely took the wind out of the bulls' sails a bit heading into this coming week. Strong close for OGI though, and we'll see if we can get some follow through. Hourly trend needs to form a higher low and see continuation. We've got our higher low at 677. So again, the hourly time frame is giving some good short-term supports. And I suggest checking each individual ticker you're looking at for what hourly support needs to hold first thing next week. 695 is a triple top. Very clear resistance. If we break, and there's 696, so a quadruple top. Break that, and we should see some follow through. We'll have to watch 7 psychological as well, but bulls have to break that level on Monday, and it's a very clear resistance a lot of people are going to be watching. TRST weekly time frame, definitely cautious. This weekly chart shows me it's overextended. It shows me the bulls are still in control because we have higher lows every single candlestick inside bar this previous week, but I know we're overextended. So I know that when we lose the daily higher low pattern, that we're going to see some weekly consolidation, and it will be healthy, but we have to be cautious of the daily uptrend being lost to indicate weekly consolidation is starting. So our new daily higher low is 1126, and we can call it that because it's a huge bull day. Close at the high of the day, engulfing bullish candlestick, Resistance from here is 1275. Look at these three tops: 1274, 75, 71, 74. So clear resistance in the low 1270s. If we get over that, we're looking at 1305 and 1348. So a very significant bull day. The first thing I do when I see a candlestick like that is I look at the hourly chart because I want to know how extended the bulls are. This tells me they're overextended. We have not consolidated and formed an hourly high or low. So this daily candlestick can look the exact same whether we've seen a support level established on the hourly and then continuation, or whether we just went straight up. And we don't know those details unless we zoom in. And it's a completely different scenario. If you show me this hourly chart, I don't want to enter a bullish position until we get hourly consolidation. Whereas if we had pulled back and formed a little hourly bull flag and then seen continuation, it makes me a lot more comfortable entering a bullish position knowing that the bulls just got their little bit of a breather. So right now the bulls are exhausted. They will need a breather on the hourly, and losing the 15-minute uptrend will be an indication that hourly consolidation is coming. And support is 1233, the most recent higher low there. And if we lose 1233, daily, or I should say hourly consolidation is coming. Very significant bull volume into the end of the day to hit a new high of the day and have that bullish momentum heading into Monday. Just be cautious because that hourly RSI is up. Well, actually, it's not getting extended just yet. But so that's a good example. RSI is an indicator that lets us know overbought and oversold setups. And right now, if I just look at the RSI, I say it's low 60s. Bulls have plenty of room. But it's the candlesticks showing me that we are extended. There is no red candlesticks. There's no consolidation. It's higher lows every single time. It shows me more than the RSI does that we are extended. So it doesn't have to be overbought RSI to be overextended for the bulls. And let's see if we do need some hourly consolidation early next week. N has seen a lot of profit taking and a significant pullback. The daily chart breaking the higher low pattern. So this is a red flag. Same thing, the bulls show up because the sector did. But on this bounce, we can absolutely anticipate a lower high to form because we pulled back from 395 to 218. That's a huge pullback. That's a roughly 45% pullback. So we can look for a lower high, and you better believe that bears are going to be patiently waiting for a lower high to form to make that entry. I would be a lot more comfortable making a bearish entry after October 17th, but that is something that, bears can keep an eye out for. And that would be a potential head and shoulders reversal pattern where we have our left shoulder, our head, and then if we bounce right now and form a right shoulder, we have the key support breaking. That would be a more significant shift in momentum. So let's see if the bulls get follow through on this bounce and set that daily lower high. Hourly support is 245, resistance is 269 and 292. So again, the hourly chart is going to give you all the levels that you need for the next trading day of action. Whenever I'm looking at a chart, the first thing I'm looking at is the daily and the hourly, and then I zoom into the shorter term time frames. HEXO, all bull, but another one on the weekly that tells me we're overextended. We see volume dropping off, inside bar tightening range. So if we lose the daily uptrend, that tells me that weekly healthy consolidation is coming. And this is an example where the bulls are maintaining their support levels and maintaining the higher lows. And due to the size of the bull move and the volume spike on Friday, 805 is our new higher low, and resistance is 885 and 909. If bulls can break those levels early this coming week, that shows beautiful follow through and keeps the daily uptrend alive. Hourly support is 839. Bulls can look to form an hourly higher low compared to that level. And this is one of the most bullish charts on the daily time frame that we have seen right now out of all these names that we just covered. And it's due to lack of resistance. It's due to the very clear uptrend. It's due to the increase in bull volume and no sign of any red flags whatsoever in this move. Everybody else has at least one little red flag, whether it's losing the daily uptrend of support, whether it's CGC on the verge of potentially losing that daily uptrend, but that's not the case here for HEXO. If I had to rank it, it would be strongest. If I had to rank names, let's do a quick ranking of all of these names. And again, this is just with regards to the daily chart, how the previous week of action went, and where we stand right now heading into this coming week. I would definitely put TRST in the stronger section. I'm just going to pretty much choose stronger and weaker. OGI is weaker, N is weaker. Enbev, it had a very strong Friday, but overall the daily chart, we're going to look for a lower high, and that's the same for TLRY. So we'll put them in their own category. TLRY and Enbev are looking for a lower high. RIV is definitely weaker. The size of that pullback on the hourly was not ideal. Who do we have left here? Cron, definitely one of the weaker names with the size of the pullback, but that doesn't mean that we're not going to see this bullish opportunity with the tightening ranges looking for a break on Monday. That's actually one of the ones I'm watching the most just because the setup is tight and so very clear. And APH, one of the weaker names because we lost that daily higher low as well. That's where I would put things. Pretty much stronger names here up to ACB. Cron's one of the weaker names on the daily, but again, opportunity is there. Enbev and TLRY, we're looking for a daily lower high. They're in their own category. And over here is the weaker names compared to the stronger names. That's where we stand. I'm done talking. Hope you have a good weekend, and we'll see you Monday.